Hey guys, Sean here. Let's talk about gold today. Now, a lot of us are starting to feel the pain, and we believe gold would be the one asset to resist this market crash. After all, the conditions seem to be bullish for gold, right? We have a war still going on in Ukraine. Inflation just hit a record 9.1%, and real interest rates are still highly negative. So, why has gold taken a dive down to $1,700? More importantly, is it even worth to buy and hold gold going forward? Now, I want us to really have a conversation here and take our time and understand the extreme conditions that we are facing today because the economy is getting hit from multiple angles. And as much as a safe haven gold is, it isn't a magical investment that is immune to market forces. I'm still a believer in gold for long term wealth preservation, and it is perhaps the only asset that I can trust in a world filled with extreme counterparty risk. But there's going to be more headwinds for gold in the months to come. Let me translate this. It is likely that the price of gold might fall more and continue being more volatile because the Fed is far from done with its rate hikes. And very soon, this insanity is going to go global. But let's get some perspective here. Year to date, gold has fallen by over 5 to maybe 6%, no doubt about it. But compared to the S&P 500, which has crashed by 17%, gold isn't doing too badly. Now, we gotta understand that we are coming off the greatest speculative mania in history that beated up prices of every asset known to man, and that included gold to some degree. Now, the era of low interest rates and money printing is going away, and there is a big backlash in the market that can't believe the party is over. Powell has no choice but to hike rates up and pull money out of the system, or else inflation would easily smash past 15 or even 20%. Now, that would mean literally the destruction of the middle class and a new generation of homeless people starving on the street. And this isn't just a problem confined to America. This inflation plague is happening globally, and many countries, inflation is hitting 40 to even 50% easily. And the bad news is that inflation is still likely to continue going up over there. There's a big misconception that many gold investors and stackers have. We believe that the higher inflation goes, the higher the price of gold should soar. After all, if purchasing power is being evaporated away, people obviously need a store of value, and what works better than gold, right? Now, this isn't wrong, but there are levels to inflation and it will affect how the behavior of people and investors are. But now we are in a unique type of inflation that's hammering down the price of gold. We are in a stagflation hell, and this is going to last for quite some time. Now, it's true that gold is an inflation hedge over a long period of time. Ever since we broke the Bretton Woods Agreement in 1971, the world has been doomed for eternal inflation era except for a brief period in 2009. And that's why we have seen gold prices climb from $35 to over $1,700 today. And it's not because gold has gained in value, it's the same piece of metal, right? It doesn't pay a dividend, it's an inanimate object. But it's because the dollar is worth less today. Now, over the last 100 years, the dollar has lost 97% of its purchasing power, no questions about it. Just ask yourself this: would you be richer if your grandfather left you $1,000 in cash or 25 gold eagles? Now, I hope the answer is obvious over here, but the big problem is the environment that we are in is highly stagflationary with interest rates going up at the same time. Now, gold is experiencing a double whammy. This means not only is inflation sky high at 9%, and the economic slowdown is happening, but interest rates are also going up, crashing this crazily leveraged market. And let's slow down a bit here and understand why. These two things that I'm going to talk about are feeding into a lower gold price. Now, the 9% inflation rate in June is highly deceptive. We all know the true inflation rate is 10% for food and 60% for gas. Now, everyone has to spend money on energy and food, and there's no compromise. So that means more of the money pie is really dedicated to the essentials, and all discretionary spending, including investing, is being cut off. This includes people who are buying gold, especially the masses who just see it as an inflation hedge or diversification. Not many people still see it as real money, right? Now, if we take a look at personal savings rate, it's beginning to crash to '08 crisis levels. People are draining their savings to buy food just to keep the lights on as well. Now, second, every time interest rates go higher, the economy is being pushed deeper into a recession. Businesses can't grow and trust and believe that layoffs are coming on the horizon. And what does that mean? People are tightening their purse strings even further, making them fearful of investing in anything, right? What's the point of buying any asset if chances are the price will continue to dip and I might lose my job 6 months down the road, right? And it's really not a wrong mindset to have. So, what are the best conditions for gold to perform? Now, the first is when the Fed prints money like back in '08 and 2020, gold immediately spikes up because it accounts for all those excess dollars printed, and people inherently know in their minds, in their hearts, that money printing is inflationary. Now, the second is when there's hyperinflation. This is when the rate of inflation increases by more than 50% a month. That's the textbook definition. Now, at this point, the whole dynamic of inflation changes, and people are in panic mode to immediately store their wealth because their purchasing power is literally burning up every single day, every single hour, right? Now, in this case, gold will act as a true inflation hedge and just soar in price. Now, during the Weimar Germany hyperinflation, gold went from 170 Deutsche marks to 87 trillion marks, right? But at this moment in time, we are in a situation where real rates are slowly going up, making it traditionally bearish for gold. And when you combine that with an economic slowdown where spending is drying up and the majority of money is flowing towards food and fuel, there is a recipe for gold prices to go down. Now, take a look at the real interest rates. It is still deeply negative at -6%, and that should be bullish for gold. But if we take a look at real yields of the 10-year treasury, we can see the rate hikes have actually spiked it up to +1%. Now, this is bearish for gold because it shows that there is a positive yield holding bonds even after factoring inflation risk. Now, this is a chart of gold versus inverted real yields, so you need to be looking at the black line in reverse. The lower it goes, it means bonds are performing well and investors are getting a real yield. The higher it goes, it means bond investors are just getting screwed. Now, since May this year, the Fed's aggressive rate hikes have turned negative real yields positive again, and that is bad for gold. This means that bond investors are somehow actually getting a positive return after accounting for inflation. And every time real yields become more positive as the black line goes down, the price of gold starts to come down as well. But it's not just rising yields or rate hikes that are putting pressure on the price of gold. It's because the rush towards a stronger dollar is happening globally thanks to inflation. Right now, we are seeing a global rush towards dollars because the world sees it as an inflation hedge, as weird as it sounds. If you're in the United States, you don't feel like the dollar hedges against anything, right? You are still losing at least 9% a year at a minimum. But overseas, many developing countries are suffering from an even worse inflation easily, and there is a knee-jerk rush towards dollars as a safe haven. And that is because the dollar is still the reserve currency and the Fed is aggressively hiking rates faster than other central banks. The ECB is still asleep at the wheels and has only just begun hiking rates, right? Only recently begun doing so, and other central banks are also slowly catching up with their own rate hikes. And that is why the dollar was at a 20-year high, breaking past 108 at one point. So if you take a look globally, things are really looking really grim for world economies, even in developed countries. UK's inflation rate has hit a 40-year high of 9.4%, and the euro has hit parity with the dollar, a historic 20-year drop, right? So now the dollar is one-to-one with the euro. And that is why we are seeing investors run towards the dollar, because even though all these currencies are sinking ship, the US dollar ship is sinking the slowest, right? It is the Titanic slowly taking on water while the other vessels are already halfway submerged. And now, because gold is priced in dollars, it is going down. So you can see that there are a lot of factors that are putting pressure on the gold price. So if you're buying gold as a trade or to make short-term profits, understand that this trade will probably go against you. There's a good chance that your bet will turn south. We have countries like India raising the import tax on gold from 7.5% to 12.5% to help support the falling rupee. We are talking about the second largest consumer of gold, making it more expensive to import gold, and this is crushing demand locally. So we are looking at an erosion of purchasing power globally, especially when there are going to be further rate hikes coming down the road, both in the United States as well as globally, especially the ECB. Now, I'm here to tell you the truth of the situation and not here to hype up gold. At least for now, the Fed is committed to wrestling down inflation, and this is setting the mood for all precious metals, both gold and silver. So here's the $1 trillion question. How much further can gold fall? What is the absolute worst case scenario? Now, obviously, I don't have a crystal ball and I won't be trying to short the gold market anytime soon because things can always suddenly reverse. If something breaks in the economy halfway, the Fed could always start to print money all over again. Now, gold is a commodity, and like all other commodities, including silver, copper, and nickel, it does have an intrinsic value. There is a cost to mine gold, and that is what sets a kind of a floor price for gold if everything starts to crash. Now, according to the World Gold Council, the all-in sustaining cost for gold is around $1,200 today. And if we double check the cost with the big miners, including Barrick Gold and Newmont, we can see the average mining costs are around $1,100 to $1,200 as well. So if the price of gold was to crash below $1,200, we will see a whole lot of big mining companies, especially the juniors, stopping production. After all, who in the right mind will want to operate a business at a loss, right? And if supply falls faster than demand, we will see the price of gold rocket back up to at least its mining cost. And this is one scenario. But let us travel back to the 1970s and the 1980s during the period of stagflation to see how gold performed. Now, from 1976 to 1980, CPI inflation flew up to around 12.4%, and during this period, we saw gold actually gain by around 53%. But immediately after inflation peaked in 1980 and started coming down, gold fell by 46%. And this crash happened because Paul Volcker, the Fed chair at the time, suddenly jacked up interest rates to a record 20%. This caused asset prices to collapse, and because real interest rates suddenly went from -6% to +5%, this was extremely bearish for gold. So how much gold will fall further will largely depend on how fast and furious Powell will hike interest rates. Let's use the worst case scenario and say Powell wakes up tomorrow and hikes rates to 10%, 11% with a snap of his fingers. And if we assume gold was to fall by 46% again from its peak, we'll get around $1,100 gold if we assume the March 2050 was the top. Now, I'm not saying that gold will fall down to around $1,000 or $1,200 because I doubt that Powell can hike rates above the current inflation rate. If he could do it, he would have done it months ago and not tiptoe around with 50 basis points here, 75 basis points there. Remember that the debt bubble is at $30 trillion and the current interest rate being paid on the debt is around 1.5%. So if the interest rates were to fly to 9%, that means that the US government will be paying 6 times more in interest payments. Do you think that is even possible? But if Armageddon does come for gold, we could see a plunge back down to a possible floor price of $1,100, $1,200. So the closer the price of gold approaches that level, it becomes more of a bargain to buy, especially if you're holding for a long time. But I want us to understand that the value of gold goes beyond just the price. Yes, in dollar terms, its value is falling, no doubt about it. But when you take a look at the price of gold in euros or the Turkish lira, it is still up this year because gold protects purchasing power in really dire circumstances. There are a lot of economic headwinds hammering at gold. We are seeing the relative value of the dollar increase, its comparative strength against other currencies is going up. But in the next 10 or 20 years, we all know it's going to be worth less and less when you head to the supermarket or the gas station. So how should we think about gold during this challenging period? Now, the way I see gold is, okay, I need some wealth outside of the financial system. I need a hard asset that will stand the test of time. I want an asset that I can liquidate easily if anything really gets nasty in the economy. And that's why I hold some gold. That's why even though prices are coming down, I'm not selling any. In fact, I'm looking to accumulate more if prices continues to get smashed downhill. Because I have a feeling that sooner or later, the Fed will step in and declare victory against inflation and we are back in a bull market again. And if they start to print money once again, we'll see everything just rally, right? Stocks, gold, real estate, everything will soar to the moon once again. And if you take a look at the price of gold versus stocks, when the Fed printed money back in '08 and 2020, gold reacted more violently than stocks and gained more in price. Plus, we are moving towards a CBDC future. The Fed is already experimenting on it. Powell is really bullish on a digital dollar, and the SWIFT system is already being mobilized to handle cross-border CBDC transactions. So just imagine a world where all your money and transactions are being tracked. Imagine a world where interest rates and monetary policy can get implemented in seconds. They want you to go spend money, boom. negative interest rates on your bank account, and suddenly you either spend it or you lose it. And this is the future that we are moving towards. There's no escape. The machines are coming for us. And that's another reason why I still hold some gold. It is to protect my financial sovereignty. Now, I really want to take a moment to pivot this conversation towards the death of currencies. The life cycle of currencies, at least free floating currencies, is going to come to an end. Because eventually, one of two things could happen. Either the US dollar gets too strong and collapses the world economy, and nations come to the bargaining table demanding a new reserve currency, hopefully backed up by something tangible, or every currency will just inflate away until your average McDonald's meal is now $100 for a burger with fries. I really don't see any other alternative for the dollar and other currencies. Sure, there are other ways to hedge against inflation, but unless you're at the top of the food chain where you can buy houses directly for cash or snap up land like Bill Gates, your options are limited when it comes to hard assets. And that's why there is going to be a market for gold and silver. Now, I want us to think about gold like a credit default swap against the end of currencies. It is an insurance against currencies that are failing. But this time, we know the house is already on fire and has been burning for the last 100 years. And if there's really a currency reset, if one day countries and people have had enough, they want to revert back to real sound money, something tangible that every nation and culture will trust, at least to me, that is likely to be gold. And that is why central banks stockpile gold. They know fiat currencies are slowly crumbling and they need an asset that holds value without counterparty risk. In fact, central banks have actually increased their purchases in 2022 as the price of gold continues to fall. And if this trend continues, it will add more support to gold prices as well. So if you're looking to buy gold today, you need to be buying for the right reasons. You cannot be chasing prices because you will be disappointed. Plus, you also can't time the markets. So to wrap things up, I really want us to understand the core reasons of why gold is going down. It has to do with the relative strength of the dollar and the extreme economic conditions we are facing. Because there are a lot of narratives floating around and many of them on the surface are factually true. Yes, gold has crashed in price. Yes, in the next 6 to 12 months, I won't be surprised if gold continues to dip lower. But I'm not playing a short-term game and not all of my money is in gold either. But realize that we are in an environment where we are coming off a period of extreme excess and every asset class is getting pounded to the ground, not just gold. Stocks are being hammered, the bond market has taken a beating, and cryptocurrencies has essentially plunged to hell. Now, there's no escaping this asset price collapse. And if you're new to gold and this is your first time buying precious metals, I welcome you to the fire sale of the century. If you believe gold will help protect your purchasing power, it's always better to average down your purchases than be buying on the way up, right? Each additional ounce you stack gets cheaper, and we are beginning to see physical premiums come off quite a bit. They're going to be fantastic deals in the months to come. So let me know what you think. Are you still buying and stacking gold for the long term, or have you totally given up hope? Let me know in the comments below. Stay safe, and if you enjoyed today's video, be sure to smash the like button and subscribe as we navigate through these crazy times. Thank you all for watching, and I'll see you soon.